Hey guys, this is Rose, and first of all, Merry Christmas. Hope everyone had a great time, and just having overall a great time, taking advantage that the market is closed today. I wanted to do this video because I've been getting a lot of requests to explain how I trade SPX, and so I wanted to clarify a lot of the things that take into trading SPX is not just knowing how to read the chart or thinking that there's this holy grail charting method that will make you become successful with SPX. What I've noticed, I've traded SPX before when I didn't really know how to trade, and yeah, that was a bad idea from the get-go. Money went down the drain. But now that I've had more years under my belt trading overall, learning the market. I'm starting to get more comfortable trading SPX. I'm not at the place I want to be yet when it comes to SPX. I feel like I'm still kind of green when it comes to trading it. And so, but I just still wanted to kind of make a video, give you some tips on how to trade it, and hopefully this will help. So, what are the benefits of trading SPX? It's cost-effective options. They trade every day. Um, they You have that flexibility of kind of reading the market and catching those short-term market movements where you can quickly gain, the market gains momentum and you can see those premiums rise real quick and you can catch a really good move. Overall, SPX covers the broad market, so kind of gives you that broad market protection compared to if you're trading like one single stock and out of the blue they get news or something like that. What are the risks? The premiums are pretty costly. If you're trading zero DTE, you can get in at, let's say you put in 300 bucks, and within seconds, you can be down 50%. So overhedging, your portfolio can really cost you a lot of money real quick. And so I definitely advise if you've never traded SPX, paper traded, just so you can see how the contracts move, see the cost, and then see how it moves. Because on choppy days where the market is only moving like 5 points or something like that, something not not as much, and it's going up and down like ping ponging, premiums just get sucked up. So definitely you have to know what you're doing. You can't expect, we have crazy days where the market goes crazy and you see people turn like 300 to like 3,000 in a day with one contract. And that doesn't, it happens, but it happens less than the days where you get all that chop. So you have to basically be ready to trade it. Know what you're doing. You can wonder like, why do I keep losing money trading SPX? I see all these other successful traders, or on Discord communities or on X, or they're posting these crazy gains on SPX. One of the things is psychologically, a lot of us, I'll include myself in it. I rather post my wins than post my losses. It's easier to take a screenshot, post it, and boom, you get it makes you feel good, or you get to show off what you did. So, you don't see a lot of when people have red days. I on Addicts group, I actually showed my Webull P&L. It's negative $5,000 from when I used to trade SPX like 2 years ago. And had no clue what I was doing. I was doing exactly what I wrote down here, which was I just followed trade ideas and call outs. If somebody posted, I'm in this SPX call. I'd blindly get in, have no clue, then start seeing the market go crazy. Like either it would go like boom out of the blue within minutes, you're up 100, 200%, and you don't know what you're doing or you haven't charted it. So you're like, maybe this is gonna go to 1,000%, and you don't take profit, and then boom, it reverses on you. You lose. Then you get mad, and you're like, oh, like, why is the market doing this to me? They're out to get me, and you end up losing all your money. So, I definitely have experienced that a lot. You don't have a trading edge, so maybe you are charting, but you really don't still have your edge of, like, for example, if you're using the strat and you're like, if I see a 3-1 or a 1-3 on the 30 minute or the 15 minute and everything else is aligning or at the bottom of a broadening formation, I know that it's about to go. And once you have your edge, you have that confidence, and so you kind of know what you're doing, and you have that confidence of getting in and not waiting too long, or to take your profit and all that. You are not mentally prepared for it overall in trading. A lot of the times we're fighting like we have all these voices within us, and and the one that's leading is like fear of losing your money, fear of missing out. You have that inner critic within you that's telling you like you can't do this, like why are you doing this? You'll get your money back, just show the market. You try to go in that revenge mindset, not realizing that who you really need to bring out is that courageous person, that person that can beat fear, that trading mindset that sets you in the right state of mind to trade, so that your your when you're looking at the chart, it doesn't seem fuzzy, because once you put money in, you're basically bringing out your fight or flight instincts, and so you let that fear take over, and maybe there's like a setup where you're like, I should get out, like this is our, I already took liquidity or something, but because you're letting fear take over, you don't act right, and you let that, like, oh, like I remember last time I lost, and if I would have stayed, I would have won. I would have made money. And then, you don't really pay attention to your plan, to your charts, so then it goes against you. And so that's, you need to prepare every day mentally, be ready for knowing that, fear, regret, revenge, all that's going to try to creep out. And if you let it take over, that's how you end up, losing, especially with SPX. Like I've noticed myself, I've been journaling my feelings and all that, and meditating. And I noticed that SPX is a ticker that will bring out everything, if I'm not mindful, it will bring out the fear, like it just everything. I feel myself tensing up, I feel hot, I feel the thoughts of other times I lost come out. I feel like that urgency. Sometimes I even catch myself saying, oh man, if I stay in, oh, this is going to be a great screenshot, when really I shouldn't be trading because of that. So I just wanted to be transparent. It takes it takes a mental toll, so you really have to be prepared for that. The way I prepare, I meditate every day. I'm doing a coaching with Randy Howell, who is a trading psychologist, and so I'm going through his program to help me throughout this journey. So that helps a lot. I listen to his videos during the weekends or even while I'm charting. He has a lot of free videos on YouTube. I read, I look at Twitter, and I try to follow like more accounts that post trading psychology quotes and stuff, because I feel like that helps me. I tend to mute the accounts that mainly post like, oh, I made 20K, or someone in my Discord made 50K. Like, I know I love it, and I love that people are making money, but sometimes that brings out the person in me where I'm like, well, I want to be like them or something. Or even sometimes you say, well, I put in all this hard work. Why am I not as successful as them? Well, the market doesn't care about how much hard work you put. So that's another thing. Um, Another thing is people don't understand the fluctuation in premium when trading zero DTE. They don't understand like the Greeks and how theta can burn you. Um, for example, if you're buying zero DTE, you buy in the morning, it's not, you're out of the money and it's not moving towards in the money and it's after like 12 p.m. or something, like your premiums is gonna start, theta's gonna eat up your premium. So you don't and that's where you either have to make the decision, do I just cut this, take the loss, or, you know, I really think something's gonna happen. And you're okay with it going to zero. And a lot of times people just want to catch those home runs. Like I said earlier, you see people with all these crazy percentages, and it happens, especially if you time it perfectly. But for the most part, I think like 70 to 80% of the time, the market is more on a range mode. It's traveling through a range before it expands, either up or down. And so you tend to want those home runs, but those aren't given every day. You make more money when you just go for the base hits. Also, a lot of times people, you know, they they want certainty in the market, but you really have to think in a probability mindset because even if I say I think my analysis tells me that the market's gonna go up today, and if I get stuck in that, like I'm telling myself I'm certain this is gonna happen because this is my A plus setup. Your A plus setup is not gonna work 100% of the time. Otherwise, we'd probably all be millionaires by now. Um, So you have to understand maybe this time I was in the wrong side of probability. Like it just happened that my A plus setup didn't turn out. So you have to prepare yourself to either not enter, if you already did enter, manage your risk, like get out, and then even sometimes change. Like if you see it quick enough, you're like, oh, I was looking for calls, but actually puts are gonna. It looks like they're gonna do good, and then change that mindset and even make money on the other way. So that's one thing I'm still learning. I'm slowly trying to get better. Like I said, I'm not a perfect trader. I don't haven't had the success with SPX that I want to yet because I feel like I'm new to it with my fresh eyes with this experience. So I wanted to be transparent. I don't want you to think like I found the holy grail and this everything's perfect. So how can you prepare? Have a daily plan. Chart SPX, and we're gonna go more in detail into charts. In this next part, I just want to make sure that I make you aware of all of this. So have a daily plan, chart SPX, chart the other indices. I like to look at QQQ, SPY, IWM, all that, just to see how the market, like, are they moving together? What's the VIX doing? What's the dollar doing? Bonds, all that. Like, just see, are we seeing confluences? What's going on? In the morning, I like to look at ES futures just to see what happened in the overnight moves. Like, did we get like a big move overnight? So does that mean that we're gonna get, maybe range during the day, or are we, tight? So so I kind of look at that. I like to read the news, remind myself of the earnings or economic events that are happening to keep in mind like the times in case I see that some volatility will be injected into the market. Work on risk management as well. Make sure that you have a plan. Um, one 5-minute candle can kill your port if you say I'm gonna put, let's say, something like 80% of, let's say you only have $500 to trade SPX and you're like, I'm buying this call for $400. And one move can kill your port if you don't have a plan, if you don't have risk management. Maybe you wait and save up money till maybe you have $2,000 or something like that, so that you have that comfort where you can buy like a contract and it won't kill your entire port if it goes the wrong way. Um, so that's definitely essential having that plan. And this is part of Randy Howe's what he goes over when he does his webinars every month. Um, you know, he lets us know like the integration of mine is part of your trading system. So the trading system, like your platform, is your edge. You know, whatever you use to look at the charts, whether like let's say it's ICT, the strat, Elliott Wave, whatever is your edge. Methodology is the risk management, like I explained earlier, and then trading psychology, meaning your mind. And so a lot of traders, when we come new to the market, we think that all we need is like a trading system. Like, I just need to know how to chart, easy peasy, I got this. Once you start putting in your money, you realize, oh crap, this is way more than I bargained for. And so you end up seeing that, oh crap, like, um, what's missing, and you think, oh, maybe I just need to change my trading method, like my trading system, and go from trading the strat to trading ICT, and then you're like, oh, never mind, what's this new CRT? Let me try that, and then blah blah blah. It just goes without you realizing that what you really need to focus on is making sure you have these three things with you. You have risk management and you manage your mind. So like I said earlier with trading psychology, I'm mindful of my thoughts throughout the trading day. I have guardrails to keep me in check. For example, like I take breaks in between, and I'll meditate. I'll, if let's say I'm done for the day and I'm working from home, I'll go for a run or something that will keep me away from the charts so that I don't try to FOMO back into the market and lose my gains for the day. Um, I like I said, I'm working with Randy to kind of establish this committee in my mind where I'll be able to trade and I won't need to, have this committee in my mind where instead of bringing the fear and the like, rage, the anger out when I'm trading, I put that more in the back seat and I have like the warrior, the courage, the sage, have those pilot my mind while I'm in a trade so that I make better decisions, especially with SPX. So now let's get to the fun part, which is the actual charts. And let me see. Let's see. So one of the things I like to do when trading futures, or sorry, trading SPX, is that I actually like to look better at ES futures. Um, and of course I do look at SPX as well, but I sometimes I've been getting comfortable with it, like realizing like, oh, you can find other things like, for example, here you can see that SPX is at monthly open, whereas ES hasn't hit it yet. Um, so maybe SPX may keep going while ES is kind of waiting, or vice versa. I take a note of both. ES as well hasn't filled this fair value gap here, whereas SPX did and it closed above it. So I look and say, okay, maybe like what's it gonna do when it gets to here? I'll keep this in mind. Um, and also both are still inside week, which this is lovely. I love. Well, actually, the week hasn't ended. I feel like it's a Saturday today. But it's lovely that both are inside weeks. And like I said, I keep mindful because if this takes out previous week high, but this hasn't, I look to see like, is it gonna, is it gonna try to take it? So, and then strat setups, I love trading the strats. So on the daily, I really like this 131, whereas this one was just like a 3-1. Um, Another thing is that I like looking at ES because since it trades, 23 hours a day, it doesn't have as many gaps as like SPX, for example, if you look at regular trading hours. So I can look for like fair value gaps. Like for example, what if we make it all the way up here for our all the way to this fill of this fair value gap. Um, and here it is too as well. But like I said, I like to look at both concurrently. And then the main reason to I like to look at it is because I personally been finding a lot of success trading with uh, with Adam Mancini's newsletter. I saw him through ADX since they post tweets about what he tweets out. So I subscribe to his newsletter and I find it so helpful, especially because he reemphasizes his methodology every day, and then he reemphasizes the same thing like don't try to go for home runs. You're gonna get eaten up if you don't try to trade level to level. So I like to look at it and then he explains this, well, the previous day, like, or the previous, like, few days, a lot. So that helps. He says he locks in profits and he trades futures. So, but I use it for SPX. And he explains his levels, like why they're a level, and he adds the charts. So a lot of the times I'm like, oh, this is agreeing with something I see it too. It's not like, I'm looking at this and it looks like rocket science or something. So I like looking at his, and then I mark down his levels. So his main setup is the failed breakdown, and I notice I'm good at that too. So I like it, and then he always outlines his major supports and resistance. So that's why you see all these lines right here that I have. And so a lot of times, if you play level to level, like for example, on I did it on Tuesday. Oh yeah, December 24th. Which now I'm like, sheesh, I wish I would have stayed in. But I think I got in at open, like kind of like when the market opened, and then I really just played it to this level here, 56. And of course, look, it almost went all the way to this level. But I was like, I had my plan, which that's another thing I do is it's like, oh well, I literally left $3,000 on the table, but I'm like, hey, this is December 24th on a short trade date, and SPX is giving these amazing opportunities. Of course, there's going to be way more days where it's going to give opportunities like that. So you just have to be patient and cognizant that it's okay to leave money on the table because more chances will come. So I played it to this level. Um, Shut it, like sold my SPX contract and called it a day. Of course, then I saw the movement and really happy for the people that caught it. But like I said earlier, not every day is like that. On this week right here, leading into FOMC, look at this chop. This was nasty price action. So a lot of people, even including myself, I got eaten up with SPX. So I think 1 or 2 days I didn't do well and I was like, all right, I'm done till FOMC. And during FOMC, I actually had my bias going into FOMC was like, oh, look, we look like we have a nice bull flag. Um, of course, that didn't happen. And so I really didn't make money on FOMC. I think I just like, I took one call and I immediately got stopped out. So I'm like, oh, I'm not even going to try it. But it's okay. Like, it's like that's part of understanding that you won't catch every move. And it's okay if others do and you don't. Like, it's totally fine. There's always more opportunities. Like, I mean, even here, like, it was amazing to see like how it came down and then boom, we already recovered most of the losses from this big move down. Um, and we might be going to new all-time highs. So I keep all those things in mind. I keep where we are in the week, in the month, you know, any broadening formations. Like I take a look at all of this. We end like the month might end in a nice hammer, so who knows? Basically, and then during the day, I kind of just go to the lower time frames. Like I do like the 15-minute. I like to wait for a few 15-minute candles to close, at least the first two. I look at the 30-minute as well, the 1 hour. And in between, I'll look at the 130-minute. I learned that from STB. So thanks, STB. Shout out to you. So here, look, we had a triple inside on Monday. That was gonna tell you that we were about to get cooking, and we did. So that was amazing. Um, some of these hybrid timeframes I like to look at just because I like to see if we have any strat setups. And then the 10-minute is the lowest I'll probably go if I'm really trying to get lower. I like looking at the 12-hour as well if I want to get like a because it kind of splits the day in half. So if you want to get a better perspective, I like more for my daily perspective. Like if I notice like this 1-3 on the hour look pretty bullish, um, so that probably meant okay, we're probably gonna have a nice move. And then with SPX, to be honest, I look at I have a Thinkorswim. I found I didn't create this. This is from Sadie Land. He's the one that creates a lot of indicators, and he did a video on how to create an SPX leaderboard on YouTube. And you can change this to whatever other ticker you want, or even to any, um, you know, date range and everything. But this is for 0 DTE, and I like to see like the leaderboard of what's looking good. And I think, oh crap, I accidentally ran it, and there's no trades today, so. But basically, it shows you like I sorted by volume to see which contracts have the most volume. Sometimes some I wait for like at least 30 minutes to pass because sometimes some crazy contracts way out the money will have more volume at the beginning, but sometimes if it's not too far out of the money, I'll get it if especially if it's in the leaderboard. So that's how I picked the 6,000 contract on Tuesday because it was number one, and and then everything else was like I was like, oh, it's not too far the money like at open. At least SPX wasn't. And we were at like 59.82 and I'm like, oh, it could move a little. And as you can see, it went crazy. So that's how I pick my contracts. Like I said, it works. It used to work way better because before there was like a trick where the last 10 minutes, if a contract had more than 100K like volume, it it most likely would go in the money and it could make you money the last 10 minutes, but it seems like that doesn't really work anymore. So I just more use it to gauge and see like where the volume is going in the contracts. But like I said, if it's too far out of the money, I won't get it. I'll get something closer. Um, but yeah, so that's what I like to gauge. I like to see where we are with the ADR because sometimes, uh, we can get to upper ADR and come back down or stall there, or sometimes like just keep going. Like even with um with ES on Friday, like ADR, like upper ADR was the high of the day. So I like to be conscious of that. You know, like I said, mark up your charts, have a plan. You know, and if it's okay, your plan won't always work. If you're wrong, you know, okay, whatever. I like to follow Adam's tweets because he'll kind of post. He's really good at like he gives me a little bit more confidence on the direction. Adam Mancini, by the way, he tweets throughout the day, and I remember for FOMC, he was like, if we lose, he said if we lose 60, I think it was 60-15 or something like that, which is the bottom of the bull flag, then SPX, or sorry, it wasn't 60, it was 6105. ES is gonna come down, and that's exactly what it did. We lost it, and then it came roaring down. Um, so I like to look at his tweets to get that little confidence, especially if like I said, if it matches my analysis as well. It gives me that extra confidence boost of okay, maybe this is where we were going. I think one of the other days I made money with puts. I want to say it was, yeah, it was Monday. I made money with puts, and I had this 59.80 target. I could have made a little bit more money, but because it ended up going lower, but I got a quick 50%. I was good, and then I went long. But this is where I have to give the example of why sometimes it doesn't really go your way quick. For example, we had here the bearish, that 59.80 level, and I actually got in calls too soon. Like I got somewhere like here, and it still went down, and I held because I was like, this 59.80, like if it doesn't keep falling and we're right at 50% of the quarter, then I think we're coming back up. And we did, but to be honest, I was down 50% on my contract. And then I eventually, like towards the end of the day, like around here, we really went crazy. And I ended up finally being able to sell it for like 30% gain. But I mean, I was like, oh, that I should have known better, to not try to, these are the lessons I'm trying to learn. Like, why am I holding or why am I over trading if I'd rather just wait for a day where we have an A plus setup. So, anyways, that's kind of like a bit of how I do SPX. I definitely would like to say, don't trade it if you're new to trading. Don't trade it if you're gonna follow callouts. Don't trade it if you don't have time to look at the charts. A lot of people have 9 to 5s, and they're like, "Well, I just want somebody's alert so that I can get in and get out when they say to get out." But no, if you don't know what you're doing, if you don't know what you're charting, just don't trade it. You're gonna end up losing money instead of trying to make money. So. But anyways, thank you for listening, and I hope this video was helpful. And any questions, I'll be available on Discord or Twitter. Thanks.